So the price of Bitcoin went absolutely insane yesterday in one of the most volatile 24 hours we've seen for Bitcoin price in a very long time. And you can actually see the specific moment in which Powell came out and started to deliver his speech. Now, at first, we did realize that the 75 basis point raise was happening. Everyone was expecting that. And we had talked about in our previous video that I had made how if we got the 75 basis point news, that it was what people were expecting, but we had to listen to what Powell had to say. Now, obviously, if we gotten the 100, it would have been just straight nuke city, whereas we got this crazy zigzag pattern, and it was right around this area that Powell started to have his speech, and unfortunately, it seemed like the Fed was just as hawkish, maybe even more hawkish than they were back during the Jackson Hole speech, which is why we did see this crazy sell-off. Now, although levels have come back essentially to the same level that we were at, trading around September 20th to September 21st, obviously yesterday leading into it. Nevertheless, guys, this is something that we need to talk about because potentially the times for easy money may be dwindling away. Now, I know this may upset a lot of you. We've been in an up-only environment ever since Bitcoin was created, right, for 13 plus years, but the Fed is not playing around. They are very serious about inflation. Now, before we get into, what Powell said, a lot of people might be saying, well, I thought that Bitcoin was a hedge against inflation. Well, if you actually look at it, it was the best hedge against inflation that we had not seen in over 40 years, the most money printing that we had ever seen in the United States, right? Something that we can break down according to Jonathan Farrow, if you want to know. Basically, these are the key points. Powell wants to sufficiently restrict rates, right? Maintain that stance for some time. A ways to go before we get there. He wants to avoid prematurely easing, which means even if they do start to see the economy turning around, they're not going to stop right away. And they're committed to getting it down to 2% inflation. Now, 2% to me seems a little insane, and I'm going to go into why. You're going to want to stick around to the end of this video. Why 2% inflation is actually potentially detrimental to the economy of the United States, and most likely they are not going to be able to get down to those levels. But he also says we will keep at it until the job is done, and then, of course, refer back to the Jackson Hole speech. Now, I have so much to go over today. Make sure you guys stick around, but these are basically the key points from Powell's speech.
My main message has not changed at all since Jackson Hole. The FOMC is strongly resolved to bring inflation down to 2%. And we will keep at it until the job is done. No one knows whether this process will lead to a recession, or if so, how significant that recession would be. That's going to depend on how quickly wage and price inflation pressures come down, whether expectations remain anchored, and whether, also do we get more labor supply, which would help as well. In addition, the chances of a soft landing are likely to diminish to the extent that policy needs to be more restrictive or restrictive for longer. Nonetheless, we're committed to getting inflation back down to 2% because we think that a failure to restore price stability would mean far greater pain later on.
So the message has not changed. Yes, a recession is possible. They are willing to put us into a recession if that's what it takes to bring down inflation, right? And now, all of a sudden, and no big surprise, the talks about a soft landing might be going out the window. And as I said, this 2% inflation is most likely not possible. Now, you might be saying, well, that's it. Throw in the towel. It's over. There's just no opportunities left. No, it's not that there are no opportunities left. It's just that now you're going to have to work harder to find those opportunities, right? You're not just going to be able to buy any old altcoin, just long Bitcoin every time it dips. Those times could be over. In fact, some people, some billionaires, some prominent investors and analysts are saying that they could see a 10-year sideways chop in the markets. In other words, you're not going to see a new all-time high for the S&P for 10 years. Now, how would that actually affect Bitcoin? Does that mean that the 4-year cycle is absolutely broken? Well, in my honest opinion, no, I don't believe it would be broken. And it's not taking a bullish stance on things. It's just that Bitcoin is so young. It's only ever seen, up only. It's only ever seen money printing, right? It was born out of the 2008 financial crisis, right? Bitcoin was created in 2009, only 13 years old. However, I do believe that if we did see a sideways market for a long time, investors would most likely start to look elsewhere. And as regulation does come, which we know it's coming, then I do believe that will be great for things like Bitcoin and maybe even Ethereum and stuff like that. Although Probably should save this for another video, but there is somewhat of a warning when it comes to the SEC and some of these other cryptocurrencies. That window could be closing. That's not what I want to talk about today. What we're going to go over is the fact that there are still many, many opportunities. You can make money in bear markets. I've been through multiple bear markets. It's just we've never seen one in this type of a macro environment. So we may switch up the content on this channel. It may not be only Bitcoin moving forward, right? It's a time to learn. It's a time to grow, right? That's what you do in these times. We're not just going to stop because things got tough. We're not going to stop just because the Fed is raising rates and markets might go sideways for 10 years. That's not what I do. That's not why I'm here, guys. We are here to grow. We are here to learn. Let's hop into the charts. Let's see what's going on. If you like this kind of content, please give this video a like. Let's spread the awareness out there. Let's figure out a way to get through this, and make sure you get subscribed because we are going to talk about how you can get through this bear market. And that is going to be my goal for pretty much the remainder of this thing that we're going through until, markets reverse and the Fed pivots. Okay. So if you like that, definitely drop a comment. Let me know how you guys feel. But ultimately, interestingly enough, people say, oh, technicals, they don't work in bear markets. Well, yeah, they do, guys. They work in any environment, right? Long term, a lot is going to come down to the macro. Short term, look at this, guys. Again, perfect bounce right here. Even though we had that dump, we are still sitting above the 89 EMA. And this is a very important level. Now, if it does break, we know what happens. We have these other levels ready. But for right now, we are seeing that support, right? The same way that we saw that support back here. And ignore these lines. They're from something we were talking about the other day, but I'm just keeping them here for reference. But you could see this right here. We did have this drop right there. We got supported. And this is the fourth time that we've been supported on the 89 EMA, right? Now, obviously, we're very low, below the entire ribbon itself. Clearly, we're in a downtrend. It is bearish. There's no way around that. But nevertheless, you can see that, for example, if you had put it a long position down here, you would have been up significantly, even in this crazy madness that happened yesterday, right? So number one, I want to point out the technicals still do maintain. Now, what is very scary though, however, and you can see over here on futures, we did have this downward sloping resistance right here. We touched it right here, and that was where we broke out of this bear flag, if you really want to call it that, although we've yet to really see the bear flag move just yet. And we also had this third point right here. Now, what makes this so scary is sitting on this bottom level right here, right? The longer you sit on a level, the more likely it is to break through. If you keep jumping on a trampoline, eventually it's going to give out and you are going to fall down to the bottom, right? And you can see right here, if we kind of get rid of this, this upwards pattern, this bear flag that we had right here, you can argue that we are starting to put in a descending triangle, right? Now, descending triangles are inherently bearish, and they're even more bearish in a bear market. Right? Now, there is always the possibility that we come up and we retest this downward sloping trend. But keep in mind, if you do want to learn how to trade these types of markets, if you want to be a trader, if you don't want to be a trader, there's other strategies you can do as well. Dollar cost averaging, you could just sit maybe half Bitcoin, half cash, wait for a confirmed bottom reversal, or maybe you don't get the exact bottom, but just so you can sleep better at night, wait until we get the confirmation of a pivot from the Fed, we see market structure recovering, we see us breaking some of those key resistances, maybe you don't catch the exact bottom, hop in there, right? But nevertheless, if you are looking to trade and we are in a downtrend, until that downtrend becomes an uptrend, what you want to do is short these levels, right? And I actually shorted this level right here, and I showed you guys the trade, which I don't usually post my trades, but I wanted to show you guys that unfortunately, that is how you play the game. Now, you could also argue down here, you might want to go long, right? But keep in mind, we've had 3 points here. We've had 1, 2, 3, 4 points down here, right? So there's more pressure on the downside of this move, right? So it's not a matter of being bullish or bearish. Bitcoin is going to 250K, a million in our lifetimes. And if you don't think that's going to happen, then, maybe we should do some really deep dives into macroeconomics. So you realize why inevitably the Fed cannot keep doing this, right? So that is what we're looking at right here. Same exact thing happening over on the spot chart. Now, the thing I do want to point out on the short term, we have still maintained a higher level right here. You could see that we are still trending upwards, in this entire pattern, but on the smaller time frame, we're trending downwards, right? We are putting in lower lows, and you can see we are bouncing in this channel now to the downside. So first we were bouncing up, and now we're bouncing down. We are going to come to the end of this move eventually, and it is going to end in a big move either to the upside or to the downside. if the continuation of the hawkish stance of Powell continues, the S&P continues to fall, we do have something like what we saw back in 2008, and we had this big, crazy, sideways type of a pattern, then that is going to be tough for Bitcoin as well, because unfortunately, the big money is still treating Bitcoin as a tech stock. That's how they're treating it, right? We know that Bitcoin is bigger than Bitcoin is the hardest money on planet Earth, but unfortunately that message has not quite gotten out there just yet. Some people get it. The majority are still treating it like it was the S&P. And that is exactly why it's following the S&P so tightly, right? If we actually go back here and you want to look at, let me actually put this in log form. If you want to see why some of these levels are very critical right here. So this red level, right? The red level that we're sitting at right now, the reason that this level is so important is because it was the previous all-time high. Psychological level, not the most significant level, psychological level, right? We have fallen below that. We tried to hold on to it. We fell below it. Now, as I said, it's not really that important of a level. It's just a psychological level. The next level of importance is obviously where we just had this little pivot low, right here at around that $17,600 level, because that's where we had the capitulation wick. Still not the most important level, psychological, because it's very new, it's very fresh, right? Really the levels that we're looking at are this weekly cluster that we had right here. That level is around $16,200. Now, if we follow this orange line all the way across here, look at this cluster right here, right? We actually had, I could zoom in to show you guys if you want to see it a little bit closer. All right, right in here, look at this, all right? So this is where we coiled up for resistance. We came down, we tested it as support, and then we came back up. And you can see how these levels play out. And trust me, my friends, they're going to play the same way on the way down as they went on the way up, as they'll go on the way down, as they go on the way up, right? These are very key levels. And these are the things that you have to learn, you have to pay attention to if you want to learn to trade these markets. If we're gonna be going sideways for 10 years, I'm not saying we're going to do that. I'm just saying people are saying that we're going to do that. Then you're going to have to hone in on your skills. Get subscribed, watch these videos. I will always go over everything that we're doing and everything that I'm looking at, right? If we were to lose that, and I'm just giving you like the doom and gloom scenario, I'm not saying it's going to happen. The most important level for me is this monthly close back here. And I know we're on the weekly chart and you can't see it, but you can see right here, look, that's exactly where we had this level right here. You can also see the consolidation that we had right here came up and then retested it as support, right? That to me is arguably one of the most important levels. Now we can keep going down the chart level after level. The next level is around 11,700. The next level is around 10,000 even. We don't need to go that far. We're not there just yet. We need to focus on what's happening right now in the short term, right? Long term, Bitcoin is definitely going to the moon, 100%. Short term, as I said, we are potentially forming, this, what do you call it? I'm sorry, guys, I can't think right now. Descending triangle. Wow, excuse me. That was like a hardcore brain fart right there. Now, let me show you the last time that we had something this similar, right? We had it right here, okay? We had this. Oops, sorry, wrong tool, guys. I don't know what is going on with me today. I am all over the place, guys. So if we take this ray and we come down here, right, you have this right here. And then basically you have, this right here, right? And what were we doing? We were forming this, it was a descending triangle, right? We kept getting the same on the lows. Everybody kept buying at the same level, which is what we're seeing right now. Everybody keeps buying every time we go into that high $18,000 level. We buy, right? And everybody was like, okay, we're consolidating. But the problem was every single time we kept getting a lower high, right? And what ended up happening? Well, once we got to essentially the apex right here, boom, massive sell-off. And we did not have that recovery until we broke back above this trend right here, retested it, and then we finally had that breakout, right? So it is going to potentially be a long road, but as I said, you can short Bitcoin. You can do that. Now, if my objective would be to accumulate more, and I hate even saying this, dollars, while technically cash is king during this hiking cycle, right? Bitcoin was the best performing asset, is the best performing asset during inflation. They are fighting inflation. They are lowering inflation. They are doing the exact opposite of what Bitcoin has been so good at basically performing against, which is the, inflating dollar, right? So that's something to point out. And this is the other chart that I had pointed out for you guys, real simple. You fall in here, you break through here, you go back into the bull run, right? So if we fall through here, we're looking to break this downward sloping trend. It could be all the way down here. It could be all the way down at 13,000. We might not break it until here. That would be the first good sign. And then the next thing would be to eventually come back above these levels, right? That is how you know we're officially out of the water. But you can see that we have had nonstop multiple indicators, every indicator. I can't even think of an indicator. There might be only like one or two indicators that have yet to fire a bottom signal. But as a lot of people have noticed recently, these indicators were created during a time that Bitcoin and stocks only went up because the Fed was printing tons of money. They were just inflating the markets, inflating the economy, right? Now they're doing the opposite. I know, it sucks. I didn't want to live through this, but we might have to. It could be over quick. It could not be over quick. This is just the cycles, and we'll get more to the cycles in a little bit at the end of the video. But you can see right here, the DXY has in fact put in not an all-time high, but a very, very recent high. We have not been this high since, September of 2002. So pretty much one of the highest levels that we've seen in 20 years. The dollar is in fact strengthening. The dollar is in fact going on a massive bull run. This will not last. It will not last. Things are cyclical. We'll get into that in just a bit. You can see right here, like Mark Moss says, can it be more clear that Powell and the Fed work against the best interest of the American people in every way? They want you to be broke so you don't spend. They want your wages to go down so your employer's costs go down. Your wants and needs are in direct conflict with their agenda. And by the way, guys, side note, if you are enjoying this type of content, if you want more of this macro outlook, you want me to talk more about the markets, make sure that you like this video, share this video with a friend that maybe needs this, maybe who's kind of sad or hurting about these markets, because there are opportunities we will get out of it. But as you can see right here, people call Bitcoin a Ponzi scheme. What's the real Ponzi scheme here, guys? Well, U.S. debt with high interest rates to buy cheap assets. Argue we need lower rates to create growth, which is what they did for years, propping everything up. Once we have growth, argue that higher rates will harm growth. Once we hit zero rates and bubble, argue higher rates will cause a recession and hurt the poor, right? It's all a trap to make the wealth gap larger. They want the poor poorer and they want the rich richer. It's not a conspiracy. This is what they want, right? Now, something that is going to end up breaking this at some point is the fact that, and by the way, you can see that the S&P is not reacting very, very nicely to Powell's hawkish stance, even though they got the 75 basis points. But what you have to understand is that by raising rates, you are essentially discouraging borrowing and making cheap money, right? Now, people were taking that money, and what were they doing? They were buying things. When you buy things, it's taxable events, right? Go to the grocery store, buy something. There's tax associated with that. If you make money trading, right, you have to pay capital gains tax. Or if you're buying houses and you're flipping houses and the economy's great, right? So what does this mean? Well, it means that the government tax receipts, tax revenue is going to end up going down. And tax is how the government, the Fed, it's how this entire system works. It's how they make their money, right? So if they are discouraging spending, then where are the taxes going to come from? If everybody's losing, if everybody's claiming a loss in the stocks, right? Oh, I bought Bitcoin at 70, now it's down at 20. I'm in a loss. I don't know taxes. I lost money, right? How long can they do that for? That's something to consider too. That's just another side note. We can go into a whole side video about how, that will eventually ultimately hurt them. But you can see right here, the S&P right here, okay, lost this very significant uptrend that it had. It retested this, came down, fell right through, and it looks like it wants to head back down to 37.26. Now, the thing that is scary, this is very scary, not 100% what to think about this, obviously, but if we do take it from the top right here to the bottom, you'll see that the S&P is down about 20%. Bitcoin is down about 70%, roughly at the time of making this video. Now, you can see that in the past, we have had crazy, let me go to a higher time frame right here. If we go to the past and look at what happened, we have had falls in the stock market very, very large in the past, 40% right here, okay? And this was back in 2002. And then we had this 2008 financial crisis where we came all the way back down. Actually all the way to the bottom was 56%. Now, if the stocks are down 20% and Bitcoin's down 70%, what do you think would happen if stocks fall 50%? Once again, I'm not trying to scare anyone. I'm actually asking a question here. Probably would get hit pretty bad, right? But the opportunity of a lifetime, if that was to happen. I mean, I don't want Bitcoin to go to $10,000, but can you imagine buying Bitcoin at $10,000 while everybody else is running away, scared, saying, this is it, it's over. That would be the opportunity of a lifetime. I mean, technically speaking, right now, people are asking me, is now a good time to buy Bitcoin? Technically speaking, yes, not financial advice. This is a great time to buy Bitcoin. It's one of the best times to buy Bitcoin. Literally, there were only like 5 other times that Bitcoin ever fell this low, compared to its previous history. But if we do follow the 85% drop that it usually does, well, that would take us very low, right? That takes us down to about the $10,000 level. But what if we went into something like this? What if we went into a sideways market for 10 years, 13 years? How long did it take for it to actually break the high right here? 4,648 days, guys. Very, very long time. About 13 years. About 13 years. Is that something that you would be willing to sit through? Is that something that you would actually be willing to learn how to trade, how to manage money, right? That's what we're going to talk about. So obviously we have a lot of indicators. For example, this super guppy, which, once it does go into the green, it usually stays green for a very long time, currently going into the red, which usually generally does signal that we're at the end of a bear market, right? And you can see right here, we are even potentially forming a double bottom. So really, when you're looking at the technicals, if I didn't know what was going on, if I had no idea what was going on with the Fed, I had no idea what was going on with the economy, and you just put these charts in front of me, I would tell you that the bottom is in. I would tell you that we are forming a double bottom, and based on historical data, we should be coming out of this sometime in the next 6 to 8 months. That's what I would tell you. But obviously this time is in fact different. But there are a lot of different strategies that you can still use, right? You can still trade these markets if that's your thing. If you're not interested in doing that, then just dollar cost average. Eventually that everything's going to reverse. It's just a matter of when, right? And Bitcoin is, in my opinion, long-term going to be one of, if not the best stores of value that the world has ever seen. But, currently in the short time, it's going to be a little bit rough, right? But you could see, here are some indicators that you can use. They're not always perfect, but here's one that I use with different types of moving averages. You have a buy right here. You see it goes up. Obviously, when you're, you're above this, it's starting to get a little bit overheated. You get, see now this sell came a little bit early, right? So you would have had to wait a little bit, but then eventually it did come down. It's not 100% profitable, but the idea is essentially that you want to be more profitable on your trades than not. So if you do 10 trades, you lose 3, you make 7, you're still doing good, right? That's the life of a trader if you're interested. If you guys do want to learn, and I've always been weird about like a signal group. I don't like giving signals out because the truth is not every trade is a winner. And people don't like that. But, if you want me to like give signals, I'll consider it, but I'm not going to like charge anything. I'm not going to be weird like that. I don't want to do any paid groups or nothing like that. That way the information is free. So, hey, if the trade doesn't work out, it was free, right? But this is what I do. If you guys do want to learn how to trade, though, I highly recommend you guys check out my BitGet tutorial. I think it's the best one on the internet. And you don't have to use leverage. You can just do spot trading. You could just, if you just want to do something a lot safer than leverage trading, you could literally just buy supports and sell resistances. And then that way, even if you're wrong, right? Even if the price does go the other way, you're not getting liquidated. You're not losing money. It's just, currently, maybe now you're sitting in Bitcoin and you're losing dollar value, or you're sitting in dollars and you're losing Bitcoin value, but nevertheless, you're not losing the underlying asset, right? We can go over that. Spot trading is a very simple way to trade, and I find that people have a higher success rate with spot trading than they do with leverage trading. But like I said, if you guys are interested, check out the tutorials. You guys already know there's over $16,000 in bonuses below. Get subscribed to the channel, like this video if you like this type of content, and I will continue to share with you every single thing that I'm going through and what I'm looking at. But like Sven Henrik pointed out, I thought this was a great little series of tweets he had. This is the issue. The last time the two-year yield hit 4% was on October 17th of 2007. U.S. debt was $9 trillion in Q4 of 2007. U.S. debt now stands at $30.5 trillion as of Q2. So we're talking a difference of $9 trillion to now $30.5 trillion. 61% debt to GDP in 2007 versus 122% debt to GDP now. That's double. That is different. That is much higher. The US has literally doubled its debt GDP ratio in 15 years, and they're telling the public they can go higher for longer without causing a major recession. Either they are lying to us and never really intended to go higher for longer, or they're lying to themselves. And I wish the media would challenge Powell today and have him demonstrate the math and reconcile it with the Fed's perpetual BS positive GDP growth forecasts. At some point, we are going to see a reversal. At some point, this is going to affect unemployment, right? If there's no demand for goods, but the price of producing goods is going up, that's a double whammy. It's costing more to make the goods, but yet nobody wants the goods. What does that lead to? It leads to layoffs. And I'm not trying to scare anyone, right? And the one thing that the government doesn't want, and think about this, the Fed, what do they not want? What does the government not want? They don't want people laid off. Because if you're laid off, you are not getting paid. And if you're not getting paid, then you are not paying taxes. They want you out there working. They want you creating an income, having a salary so that they can tax you on it, right? And at some point, if unemployment rates get too high, they are going to pivot. I mean, yes, CPI data, inflation, all this other thing, but this is why I'm saying coming down to 2% is unrealistic. Look at these numbers. Double the GDP. US debt, 9 trillion versus 30 trillion. Very, very different story here, guys. They cannot play the same game that they've been playing. It won't work this time. And then what are they going to do? They're going to turn on the money printers again. And it's people that are positioned or have positioned themselves or have been able to grow during those times that are going to benefit, right? And that's exactly what you need to focus on. You need to focus on those times. I want to show you this, guys, before we go. You might have seen this before. And this isn't just men. This could be for women. This could be for children, for people in general. But the ultimate theme is still here. And you may have heard this. Hard times create strong men. Strong men create good times. Good times create weak men. Weak men create hard times. And the cycle goes again. Hard times create strong men, right? Now, this has nothing to do with the markets, but it doesn't matter. History is cyclical. You can watch the rise and fall of an empire. You can watch, hard times versus bad times, war versus, prosperity, right? Whatever it is. The cycles, don't listen to this doom and gloom. There's no end of the world. You know how many times people said it was going to be the end of the world? It's not going to be the end of the world, guys. It might just be a little tougher for a while. Okay, good. Well, guess what? Hard times create strong men or strong people, whatever. I'm not trying to single out men, women, whatever. Okay? Hard times create strong people. And this is the time that is going to make you the strongest person that you've ever been. If you can take the time to learn, read books, learn about the macro, which I'll be sharing more macro on this channel. I know it's called Crypto Zombie. I might have to change the name. Might have to change the name of my channel to something else, Macro Zombie or Financial Zombie. I don't know. But, long story short, guys, we're going to be okay. There's going to be opportunities. I saw altcoins doing 100Xs in the past two bear markets. Altcoins. There's always opportunities. There's always speculation. It's just not as easy as it used to be. You're going to have to focus. You're going to have to buckle down. We'll get through this, okay? I love you guys. And friendly reminder, just because I got to throw it out there, guys, this could be an opportunity. I don't know what'll happen, once this token unlock. This is not financial advice, but the Palm token, as I said, the token sale is going to be over in 21 hours. It does have utility. It will be used on the platform. It will be burned, and you will need this token if you do want to participate in future sales. So make sure you check out my link below in the description, guys. 22 hours left. That's it for me today, guys. I hope you enjoyed this type of content. I hope you enjoyed this video today. We're not stopping. We're not going anywhere. We're not going to let Powell or any of these guys hold us down. We're going to keep moving forward. I love you guys. You're awesome. Stay safe. Put your head down, focus. And if you guys do really want to learn to trade profitably and responsibly, and you are interested, make sure you check out these videos popping up right here, right now. Until next time, stay crypto. And of course, peace out.